All right. Good morning, everyone, and thank you for joining us. I'm Brittany Branyan, and I serve as Director of Cary Center Collegiate and Community Programs, to include the Nonprofit Affiliate Program, currently serving over 130 nonprofits in East Alabama and beyond. Welcome to our last virtual program of 2020. I can't believe it. An overview of the Form 990. If you were anything like me, you have the heart and vision of a nonprofit leader, but the business side of the organization isn't your favorite, and that's completely normal. And that's why I feel that this program, much like last week's, is especially beneficial. Before we begin, I would like to share a little more about the Nonprofit Affiliate Program for those of you who are unfamiliar. The Cary Center Nonprofit Affiliate Program fosters a community of educators, professionals, organizations, and students who have a desire to embody philanthropy, nonprofit studies, and leadership in their professional and personal lives. We provide professional development and networking opportunities to members to include Mix and Mingles, the Cary Center Volunteer Internship and Career Fair, or Meet Me at the Vic, and the Cary Center Nonprofit Summit. In addition to these events, now more than ever, we are focusing on professional development and learning opportunities. Cary Center nonprofit affiliates are the first to learn of upcoming program in the new year, and membership is free. So make sure you join at aub.ie/NPAAPP. And I'll go ahead and put that in the comments after we begin. Now let's get to the reason you're all here. Please join me in welcoming today's speaker, Jeri Groce, CPA. Jeri Groce is a senior manager in Warren Averett's audit division and is a part of the firm's public sector industry group. She joined the firm in 2004 and has 15 years of experience in public accounting. Jeri provides auditing, attestation, and consulting services. She also specializes in planning and conducting audits for nonprofit, higher education, and governmental entities. She also has extensive experience in single audits. Jeri resides in Pike Road, Alabama, with her husband and 2 sons. Please help me welcome Jeri Groce.
Thank you, Brittany. Actually, as of 2 weeks ago, I am now in Montgomery. We moved around the Thanksgiving holiday, so that was kind of a whirlwind. But thank y'all for having me today. I'm happy to be invited to do this. It's a little different through Zoom, but I think all of us are getting quite comfortable with this. I've done every audit and everything since March through Zoom. I have only been in one client office since March. So I'm getting better at this. All right. Brittany did give my formal bio, but just a little bit more. I actually have had my work anniversary, so it's now 16 years at Warren Averett, legacy firm Wilson Price. And I have worked all 16 years in our public sector. So all of my experience has been in the not-for-profit area. So I'm gonna go ahead and share my screen. All right, can everybody see that? Okay, good. All right, yes, we're here today to talk about just an overview of the 990 that you file. This is the return filed by any tax exempt organization. Of course, I'm not going to cover every single line of this of the 990. I would lose you. I don't think anybody wants to hear all of that. But I'm just going to go over, kind of the important pages and schedules. And you might have a CPA or an outside accountant prepare this for you, which is a good idea, but it's important to understand this because you do still have a responsibility to review and approve the form before it is filed. So before I get started, just a little bit about Warren Averett. We are definitely more than an audit and tax shop. We consider ourselves business advisors. So as you can see, we have expertise in an array of different areas. Anything from fraud investigations and litigation support. We have an incredible IT team that can evaluate systems, networks. They do all kinds of security testing and advising, and even advising on what software. We have an HR group, which has been very popular right now just because of all the CARES money coming and all the confusion about, the payroll deferrals and what do I do, when someone has to quarantine for the second time, a second 14 days. And, they've been able to really help a lot of our clients with how to handle that. Another popular is our outsource team. They do the normal payroll and the outsource like bookkeeping type stuff, but one very popular service they provide is a needs assessment, where we come in and we evaluate your policies, your procedures, your workflow, and make recommendations to streamline and implement best practices. And then we have personal services area, which is wealth management, your just normal investing. And then daily money management is also a very popular service. This is more than just bill pay service. For example, we've got several families that live elsewhere that have aging parents, and Warren Averett handles more than just paying their bills. We've found home health care. We've assisted in finding them a place for assisted living. We handle like insurance needs and all of their financial worries. And then we just have retired executives who have said, I've done this all my life. I'm tired of doing it. Somebody else take over. We are over 800 employees now. We continue to grow. We have 15 offices. And like I said, I live in Montgomery, and I have been in the Montgomery office my entire career. And just a disclaimer, that all these slides were prepared by me, and so they are not authoritative literature and should just be used as a reference. All right, so let's get started. The Form 990, this is the information return to be filed by all tax exempt organizations. There are 4 versions of the 990. Then the first is a 990N, which is just a postcard. And that is just for smaller organizations that have gross receipts of less than $50,000. Then the middle form is the 990EZ. So if you have gross receipts less than $200,000 and your total assets are less than $500,000, you get to file the 990EZ, which is much shorter than the full-blown 990. There's also a 990PF, which is just for private foundations. And then the full-blown 990. So if you have gross receipts over $200,000, you have to file the big one. It is very important to file this timely. It is due 9 months after your year end. You get 1 pass in the lifetime of your organization to file this thing late. After that, it costs you $100 a day if it is late. So it's very important to get that filed. And also to file it correctly. A lot of sophisticated donors and grantors will either request a copy of your 990 or they'll go pull it from GuideStar to check into you before they give you any money. All right, 990 page 1. The first page is just your basic information about your organization. Box C in the middle, be sure that you use your legal name. There is a line below that to report you're doing, if you go by another name and you're doing business as, but that line on the first line, that has to agree to any kind of filings or information the IRS has. Box B to the side, pay attention to that. Anytime you have a change of address, name change, you have to file an amended return. You have to notify the IRS of that. Box F also gets missed quite often. This points the IRS to the person that they should ask any questions of. If you don't have someone listed here, they're going to go to whoever signed it, and that may not be the right person to ask the question. The executive director may not be the person that's going to know everything. It should be the fiscal officer or something like that. Under part 1, the summary, this does not have to be your formal mission statement. Most people use kind of a shortened but descriptive statement here just to kind of get your point across, and do the full-blown mission statement on the second page. Line 6, just a word of caution, be sure to include your board members in your number of volunteers. A lot of people make that mistake where they just go pull those volunteer numbers and forget that their board is also volunteers. All right, the second half of the first page is a financial summary. You don't actually enter any information directly here. All the following parts and schedules of the 990 actually feed into the summary. So this is just kind of high level. And then at the bottom, make sure that your signer is either your current president, vice president, treasurer, executive director, or your fiscal officer. This has to be someone that has the authority to sign on the organization's behalf. And I did say this before, but if anybody has any questions, since we are live like this, please raise your hand or send a chat or something, please stop me. This can be interactive and we can have discussions if I'm going too fast or whatever. Okay, moving on to page 2. This is the part, do I see a question? Let's see. Oh, that was from Brittany. Okay. All right. Yeah, Brittany, wave at me if I miss them. Okay, line 1 here. This can be your formally adopted mission statement. If you wish to get that long descriptive one out there, this would be the place to do it. Number 2 here, periodically compare your program services to your tax exempt application. You want to make sure that you're avoiding any kind of mission creep or any reason for the IRS to challenge your tax exempt status. We want to make sure we're still in line with everything we told them we're going to do. And then starting with line 4, this is very important. This is where you get to tell your story to donors and grantors. Think of this as more of like a marketing section. Each service or activity you have should have a good description and the amount that you spent on that activity. Things to think about, your grant expenses are reported here, not your grant revenues. That's one area of confusion because it says including grants of on that line, but that is grants to other organizations. That's not the grants you received there. And then your program service revenue, if you have some related to these activities, is reported here, but not contributions that went towards those program services. So those are just 2 areas that we see a lot of mistakes or questions on. Uh-oh, it froze on me for a second. Uh-oh. There we go. Okay. Okay, page 3 and 4 of the 990 is 2 pages of checklist. Any yes answers that you provide in this part will require a supplemental schedule, and those are schedules A through R. The information for these are double. If you're not preparing but just reviewing, you can look at your financial statements if those are prepared, like a full set of financial statements. Most of those note disclosures are going to give you all the information that are going to generate these yes answers. All right, skipping to page 6. Page 6 is significant because this covers your governance and your management. This section was added by the IRS in the last overhaul of the 990, which was several years ago. But it just, communicates to us that this information is very important to them. It can be challenging to kind of gather all the information for the disclosures on this, but please do a careful review because these are kind of best practice recommended policies, not necessarily required. But each one of these, if there's a yes or no answer, they do require responses on whether you have it or you don't. Some other caution items in this section, just for you to be aware of, minutes of your board and committee meetings are expected to be maintained. Marking no on this could indicate to the IRS that you're not meeting their expectations. And we certainly don't want to flag anything for them to come ask more questions. And also ensure that your minutes reflect your exempt purpose and activities. Again, that's proving to them that you're still following that exempt purpose. Also, you're supposed to review the 990 prior to filing. Notice it says reviewed, not approved. But all filers must answer this question, and you have to disclose to them who reviewed it, when it was reviewed, and how it was reviewed. The next one is your conflict of interest policy or process. This is definitely an IRS hot ticket item. They are looking for, are you using a questionnaire? Are you documenting your process and how you're disclosing and handling any conflicts of interest that arise? They want to see that you're managing that and disclosing it properly. And then the last one, reasonable compensation. This protects the organization. Your reasonable pay should be based on data that compares of comparable salaries, your approval process, and the documentation of that process. If the IRS were ever to deem one of your executives' pay as unreasonable, there are immediate IRS sanctions and penalties, which can be up to 25% of what they consider excess pay. And that excess pay has to be returned by the person receiving it. So, like I said, this just protects the organization if it is over, 150,000, just to have that entire process documented so it can't be questioned. Some other items, your return has to be provided. A copy of your return has to be provided if someone asks for it, but you do not necessarily have to always post it on your website. There's a lot of confusion on that, about whether it has to be out there. And also, just a word of warning, any joint ventures that you go into with a taxable entity, I hate to use the word tax shelter or that, but they do carefully look at those pairings. It's a lot easier to just join with another nonprofit to go have like, hey, let's have a 5K run or something like that. But when you join with a taxable entity, just make sure that that venture is serving your charitable purpose. And that is an IRS revenue ruling that I've noted there. All right, part 7, page 7, part 7. This is all about your leadership. I get a lot of questions about who gets reported here, what gets reported, what column, where, what column do I put it in? So the next couple of slides, we'll go through what you need to include here and all those confusing bullet points that are listed right there under section A. So the first part, who gets reported here? The easier ones are the officers and your directors or trustees, whatever you call them. The biggest confusion is, well, what's a key employee? A key employee must meet 3 tests. The first one is they have to make over 150,000. The second one is they have to have responsibilities or authority that are similar to your officers or directors. So they are a manager or person of authority. And the third one is that they must also be one of your top 20 in the organization that meet the first and second test. So they're not expecting you to list 50 people that make over 150,000, if it's an organization that big, but that is rare. I've never seen 20 people listed in my career, but there are those very large nonprofits. But and then just the bottom 2, you'll see on several of those bullet points, they'll say current or former. So just to kind of clarify that, when it asks you for current, that means someone that has served at any time during the organization's fiscal year, not your calendar year, if yours is different. I'll get a lot of questions. It's not just, okay, we're putting the list of board of directors of those that at the end of the year. If someone only served 6 months and had to resign from the board, they are still reported there. And it's not just your existing employees at the end of the year. If someone was resigned or terminated or left the organization, but they fit those other highly paid requirements, then they're still reported, even though they may not be with the organization. And then when they ask for former, that is a 5-year look back. All right, so what gets reported about compensation? The first 2 bullet points, we're talking about your key employees making over 150,000 are reported. And then you have to report your 5 highest paid employees making over 100,000. The bottom 2 are talking about former. So any of your former officers, key employees, or highest 5 that made over 100,000. And then any former board members or trustees that received over 10,000. They reduced the threshold way down to 10,000 here because really your board members and your trustees should be volunteers. And so any of them receiving over 10,000 is not the norm. So you would need to report that here. One tricky thing that trips up a lot of people. Your current officers and directors, they're reported on your tax or your fiscal year. So whatever your year end is. But your employees, your key employees and your highest 5 are reported on the calendar year. And that is so that those amounts reported match their W-2s or their 1099s or however they're paid. And that's just one way that the IRS, it's a check and balance, and they have been known to take the information from the schedule and they will trace it back to that individual's personal 1040. So I want to make sure we're reporting on the right time frame. So where does all this get reported? As you can see, it's column D, E, and F. So column D is the most straightforward. That's, box 5 of wages from the W-2, or box 7 from a 1099 contract employee. Column E is related entity compensation. I have a few clients that have a closely related organization where maybe their executive director or something salary is split between the 2 organizations. So even though this might be for only one of the entities, you do have to report that other related entity here and on the other one so that the IRS can match up for that individual both places. And then column F is just anything that's not going to show up on that W-2 or the 1099. Examples of that, any employer contributions to a defined contribution plan, or any health insurance or reimbursement plans that are provided by the employer. That is also considered compensation to them. All right, part 8 begins all the financial reporting. First part is revenue. Things to note in the revenue section. You do not report your unrealized gains and losses from your investments in this schedule. You also do not report your contributed services or facilities in this schedule. You'll see 2 kind of large sections on the left. The top first big section is your donor, your grantor, your revenues from fundraising activities, your receipts from United Way, those type of things. The second section, your program service revenues, these are more of your earned type revenues, and they do require a business code of what you are doing. Column C, this is unrelated business income. If you report more than $1,000 in that column, you will have to file a 990T, and you may owe taxes on that unrelated business income. Some examples of that, because I get a lot of questions on that too. For instance, I have a client that sold ads in a magazine that they put out. Well, that's not their normal business, so they had to file a 990T and actually pay taxes on that. If you get rent, like if you sublease part of your office space, if that's not in your normal tax exempt purpose, you may have to pay taxes on that as well. I don't know if any of y'all remember or had to go through the whole parking debacle a year or two. What was that, the 2018 tax reform, where they tried to tax nonprofits on providing parking spaces for their employees. That has been repealed, and for all of our clients, we have filed to get that reimbursement and a return of that. But yeah, anything that you're doing earning money that's not in your exempt purpose could be subject to the taxes. And line 8 is about fundraising events. And I want to emphasize events. So these are like special events that you may have, and not just your typical fundraising, your development direct, whoever's doing that type of stuff. This isn't mail outs or something like that. That's line A is going to be your income that excludes the charitable portion. So just think, what gets reported here is that non-deductible portion, and non-deductible by the donor. I know, like if you buy a ticket, I know, and you may have to provide, most of you are probably used to providing a letter that, if you have a donor that purchased something to go to your event, they get a letter that says only this amount was deductible. So you are reporting on the flip side. So whatever was directly related to this event, not the charitable portion. And then the expenses have to relate directly to the generation of this revenue. So it can be any expenses you incur, like the prizes you give out, your cost to rent the facility you're having the event in, the food and beverages that are served, the entertainment, security you have that night. But it does not include things like invitations, the invitations you sent out before. So it has to be directly related to the event. Even though I would say, hey, how do we get people there? Invitations, they specifically exclude those beforehand costs. And just examples of those types of events: dinners, auctions, 5K runs, my children selling school wrapping paper every year, those type of events. Part 9 is your functional expenses. Most of the time, this is entered from your audited, reviewed, or compiled financial statements, but it may not match the financial statements exactly, because you either may need to break it out more here on the 990 on the requested line items, or less, just depending on your reporting model. You'll see there's 3 columns: program, service, management in general, and fundraising. And again, this is fundraising here is not your events. Those are reported on, like we just talked about in the revenue section, net of the revenues. This is all of your other fundraising efforts, like your mail outs, paying your development staff, things like that. Word of caution, column B, that total at the bottom of this page must agree back to part 3 that we were looking at on line 4, where I was talking about, this is your marketing section, where you're describing your program services and giving the amounts that you expend on all of those. Those 2 amounts have to agree. Most tax software will throw up a red flag, and that can't happen. But if you are preparing and a CPA is not, just make sure that those amounts agree. Part 10 through 12. I didn't put pictures of these parts just because it's just all of your financial information. So part 10 is your balance sheet. You're probably more accustomed to a statement of financial position. That's what they're called for most nonprofits. But those are your assets, your liabilities, and your net assets. Most of these come from your financial statements, or if you don't have financial statements prepared, from your trial balance or your accounting records. Part 11 includes a reconciliation of net assets. I told you when we looked at the revenue section, things not to report. Well, that's where you report them, is here. So your reconciliation of net assets is where you include those unrealized gains and losses from your investments, and then you include your donated services and facilities here. Then part 12 is your financial reporting disclosures. They want to know, are you preparing this on cash or accrual method? And then, have you had financial statements compiled, reviewed, or audited by an independent accountant? All right, now on to the schedule. So the first one is Schedule A. The top part of this schedule is definitely definitional. Again, we're saying what type of organization are you? Are you a church, school, a non-governmental unit, or just a not-for-profit organization? And then based on that answer, part two calculates your percentage of public support, and it tracks this for 5 years. To remain a public charity, you have to always stay above that 33 and 33% public support percentage. Otherwise, if you fall below that, you may have to reclassify yourself to a private foundation. So to keep that public charity status, it's your public support over your total support to get that percentage. So the public support, what goes basically in the numerator, is going to be like your contributions and your program service type of revenues. And then it's over total support, which you would take that program, that public support amount, and then you add back your investment income and special events. So I did have an organization, several years ago that found themselves having to reclassify to that private foundation because they had grossed up so much amount of investments that a lot of their income was earnings off of their large investment pool, and it just kind of snuck up on them. They were not still in that fundraising mode. They had already built up such a large endowment and all that kind of stuff that it snuck up on them. So just watch that percentage. Schedule B is your schedule of contributors. The top section of this, which is not pictured, again, you disclose what type of organization you are. Most of the time, it's a 501c something, 3, 6, 7 are most common. Then you have to pick whether you're following the general or the special rule. Most of the time, I see the general rule. So the general rule is that on this schedule, you report any donors that gave $5,000 or more during the year. And you do have to include their name, address, total amount, and the type of contribution you received. I have gotten lots of questions about this in the last couple years, so I just want to point out, you can report anonymous donors here, but it's only if you truly do not know what the source was, not just because a donor asked to remain anonymous. That means anything you put out to the public, they want to be anonymous, but if you know the source, you do have to report their name here. And just a reminder of that bottom note, be sure to remove Schedule B before publishing or providing a copy to anyone. The only people that need to see Schedule B is management, your board of directors, and the IRS. No one else needs a copy of your donor information. When it gets published on GuideStar, they remove Schedule B. So I always encourage my clients to just go ahead and have that copy with that schedule removed ready if somebody asks for it, so that you don't accidentally grab the wrong copy and get that out there. And that, again, it goes back to that anonymous. If you have someone that wants to remain anonymous, you want to protect their information. Something. I'm talking. Okay. Like I said, I'm not going through every schedule. So Schedule D is the last one we're going to talk about today. Schedule D has 12 parts, and it just has extensive details about the assets and liabilities that you have disclosed in the other parts. Some of those that we get lots of questions on are the donor advised, custodial funds, endowments, fixed assets, and investments. I wanted to take a second and talk about the difference between donor advised and custodial funds, because I get this question a lot. The difference really relies in control. A donor advised fund, a donor gives you an amount of money to be invested. They get the immediate deduction, but then every year they can request that you maybe fund or give a gift to another nonprofit organization. But at the end of the day, the nonprofit that received the donation has control over that fund. So you could decide to say, no, we're not going to give that to whoever you requested because they're not a tax exempt organization, or for some other reason. That's different from custodial funds, because custodial funds are not your money. You're either serving as a fiscal agent by receiving those funds and then cutting checks on their behalf, or like a lot of university foundations, which I do a lot of that work too. It's very common for the university to invest money in their foundation, in their big endowment pool. And so that foundation is just holding that money for the university and investing it, but it's not theirs. So no revenues and expenses from that money gets reported on your set of financial statements. You have the asset, which is either the cash or the investment, and then you carry a liability for whatever you owe back to them, because again, it's not your money. And then just one word of caution, I have noticed through my years that the word endowment gets thrown around a little too often. So just make sure, if you have to disclose all that information, that your fund truly meets the definition of endowment and isn't just like a savings account or a reserve. Endowment funds are meant to be invested for the long term, and that only the earnings are spent. And this is done by an outside donor, or your board can designate for an endowment. But again, I've heard that too often when someone's just referring to like a board reserve for future use or for a special project. That's not the same. And then on Schedule D, it also includes a reconciliation between your audited financial statements and any of the 990 amounts. Again, reminded that 990 does not report donated services or your unrealized gains and losses on investments. So it will take, if you have a set of audited financial statements, it will show the audited revenue, and then it will take out those items and then show you the revenue that's reported on the 990 so that you can see the difference. And then this is not 990 related, but just because we are an ongoing pandemic and we get questions about this all the time, I just felt the need to put this out there and just kind of remind everybody. In March, they passed this CARES Act, and there were several options for assistance. I think the most common ones I have seen were the payroll tax deferral, the employee retention credits, and then the payroll protection program, the PPP loans. We had hoped that Congress was going to pass kind of a blanket forgiveness for smaller loans. And there for a while, we were advising our clients just to kind of hold off, but that did not happen. So we are just now telling our clients that if your bank has their portal ready, go ahead and file for forgiveness if you got a PPP loan. But whatever type of assistance you may have applied for, just a reminder that all those qualifying expenses end December 31st. So you've got, what are we on the 16th? So you've got 14 days to spend all that or to expense that to qualify for one of those programs. And that is all I had for today. I didn't see any questions pop up, but I am happy to field any questions if you got any.
If you have any questions, feel free to unmute yourself and ask, or again, if you prefer to put it in the chat, that's fine too, and I can ask for you. Thank you so much for covering the CARES Act there at the end, because I know I get that question a lot, and it is important to remember that you do just have a few more days to take care of that. And get that settled. So yeah, and thank you for putting up your contact information. I was going to put it in the chat as well. If you have any additional questions, that'll come up afterwards, because if you're anything like me, you were writing a few things down that you didn't understand, feel free to reach out to Jeri. And if you lose this contact information, you can reach out to me and ask me as well, and I can put you in touch with her.
Yes. We do have an entire task force that has dug into that CARES Act and knows it inside and out. And I'm thankful to have that resource within our firm, so that anytime a unique or specific question comes up from our clients, I know who to reach out to. I may not have the answer, but I can find it for you.
Yes. And if you do already have a CPA, they will have this information as well. And again, I'd never understood the importance of all of this until my husband became an accountant, and I'm now like, how do people live without them, especially nonprofits? I really don't know how we don't. So that's definitely something you want to think about if you don't already have that type of professional. So again, thank you so much, Jeri. We really appreciate you sharing today. And I'll go ahead and upload this video. Oh, good. We have a question. Um, I'll finish saying this before I ask the question, but I'm going to upload this video on YouTube and let all of you know so that you can rewatch it, share with your colleagues and friends. All right. Michael says we received $1,000 grant from our SBA CARES Act back in April. Does this impact our filing? We didn't receive the PPP loan.
No, if it was just a grant, for just $1,000, that does not, it'll just be reported, just as grant income as you normally would on your 990 or anything like that. It doesn't come anywhere close to the threshold of throwing you into a single audit or any of those things that have happened to a couple, well, more than a couple, a lot of organizations that are not used to having those type audits and stuff. We had a hospital association that had not had a single audit in probably 10 years, but of course, they get all this money to push out to local hospitals, and they are thrown into a single audit this year. So they are, wouldn't say they're real happy about that, but it does happen.
Yeah, that was a good question. Thank you for asking. All right. Well, if y'all have any other questions, you can either, as you see Jeri's email up there, you can email me as well. And again, Jeri, thank you so much. I think this was a perfect way to end our virtual programs this year. And all of y'all, make sure that you stay in touch, and we will let you know what we have going on in the new year. And happy holidays.